Final 2 hours of the trading week, the bulls would look to end the week on a high. And you're watching Midcap Radar on CNBC-TV18. I'm Hormas Fataki, and with me as always is Vivek Iyer. Vivek, good afternoon.
Good afternoon. Bulls will hope to end the week on a high note, but at this point of time, it's a steep recovery that will be required to end a Friday on a positive note. But we have quite a lot lined up on this edition of Midcap Radar. Let's start off with the top headlines. Good afternoon. First headline, heavyweights see a pullback dragging indices lower even as mid-caps continue to outperform. Energy, metals and utilities are the big gainers even as IT drags.
Aether Industries surges in trade on the back of a good quarter. Revenue surged over 40%, while margins too have seen a significant expansion.
Havells reports a weak quarter, but stock surges on positive management commentary as they expect most of the business segments to return to normal growth and margin levels by the end of the current financial year.
Sterling and Wilson Renewables sees deep cuts after cautious management commentary. Order book moderates sequentially even as more details on the Nigeria order are awaited.
Brokerage firm Kotak Institutional Equities has upgraded Macrotech Developers to buy from its earlier rating of add, but leaves the price target unchanged at 1,340 rupees a share. The stock surges in the trading session.
Some bit of cool off from that attempted recovery that we saw just a few minutes earlier when Mangalam and I called time on halftime report. The Nifty was down around 60 points. Now we're down 120. So that attempted recovery is getting sold into. We're still 0.5% lower on the index. We were up 300 points over the last 3 trading sessions. So we're still in the green as of now, but of course to compensate for Monday's fall as well. The broader markets though, they are the ones that have seen the biggest action all through this week. 4% down on Monday, recovering most of it over Thursday. The mid-cap index absolutely at the flat line as of now, and the small cap index, that too is also trading somewhere around about that flat line as well. So some cautious moves coming in there on the broader markets as well, but there are enough and more movers in that space, and Vamakshi is joining in to take us through the mid-cap movers this afternoon. Vamakshi, good afternoon.
Well, good afternoon, Horma. As well, the index is flat, but there's a lot going on within the index. Let me first pull up the list of the stocks that are gaining momentum in trade today. First up is FACT. That stock is surging by almost 7%. BLS International Services is another counter that is a buzz in trade. GSFC as well as RVNL. RVNL continues to gain momentum in trade this week. Top losers, on the other hand, include names like Sterling and Wilson Solar. The stock was up yesterday but has fallen down by nearly 9%. And Jewelers continues to be under pressure, featuring on our list every day this week. PB Fintech is another counter that's seeing a sharp fall of almost 5%, and NetWeb is down somewhere around 4%. But apart from that, lots of stock reacting to their numbers as well. That includes Hudson Agro. That stock is seeing a very sharp fall of almost 7%. Aether Industries saw a very sharp spike up. It has cooled off from the highs, but nevertheless is holding on with gains of nearly 1%. Swaraj Engines, on the other hand, seeing an uptick of almost 4% after its numbers, and Havells reacting modestly up nearly 2%. But apart from that, there are several defense stocks that are up and away in trade today. Bharat Dynamics is surging by almost 6%. Hindustan Aeronautics and BEL, both of these counters are also a buzz in trade today, and there are several other defense counters that are also seeing good moves today. Lastly, let's also focus on stocks that are gaining, backed with very strong volumes. IDBI Bank is up nearly 5%. Cochin Shipyard, Aadhar Housing Finance, as well as Garden Reach Shipbuilders, all of them are surging on the back of very strong volumes.
Thank you so much, Vamakshi, for joining us and taking us through all of the stocks that are making the strong moves in the broader end of the markets. Let's now welcome Hemen Kapadia from DR Choksey FinServ for a technical check on the market. Good afternoon, Hemen. First up, what is it that you're making of the markets at the current levels? Where do you see the Nifty and the Bank Nifty headed from these levels?
A very good afternoon to you, Vivek. Thank you for having me on the show. So always a pleasure. Well, we are deeply oversold. That's been for some time now. 23,100 has held up till now, Vivek. Maybe we breach it early next week. I believe 22,800 should be a very decent, if not a strong support level. If we do come there, I think that would be a chance to take a contra call, because I feel that the downward momentum is running out. Maybe the VIX is up because of the Trump swearing in. They have a budget coming up. Because a VIX of 16 would not be conducive for the market to stabilize or start moving up. So some of these things are moving parts. They'll take some time to settle, but I just feel that not too much downside is left. We should be stabilizing somewhere next week. Probably by the time we speak next Friday, we might have posted a bottom. Vivek.
The bulls would take that with both hands, hey man. It's good afternoon, first of all. And what are the stocks that you are recommending in anticipation that we may have made a bottom coming next Friday?
Okay, Hormaz. Firstly, it's the big daddy of all. It's Reliance. Favorite stock has been for 3 decades, and that doesn't change. 6 months of a downside, Hormaz. Deeply oversold. Positive divergences, crossover buys, base formation in place. Everything seems to suggest that for the time being, the worst is over for Reliance, and we are setting the stage for an up move. So I think there is not much of rocket science involved. I believe after 6 months, Reliance will shine, at least for some time now. So a buy call on Reliance at 12.95, stop loss of 12.60, target of 13.65. It's a modest target. I believe we could be and should be probably heading for further upside even beyond that. The second stock is Dabur. FMCG pack was deeply oversold. Lever gave a flip-flop, but Dabur has been relatively stable, a rounding bottom in place. Technically, almost the same logic applies as Reliance. Oversold, positive divergence, crossover buy, not only on the daily, but on the weekly. Everything looks hunky-dory. So Dabur, okay, it might not move that fast because it's basically a defensive. But since pharma and IT are looking bad, I think the market and these stocks should do well. Dabur, buy at 525, stop loss 510, target of 555, risk reward ratio 1:2. That this too might get overshot, Hormaz.
All right, Hemant, thank you so much for sparing time joining us today to share with us your views on the index and on specific stocks as well. It's time for Growth Code, a special initiative by Grow and CNBC-TV18 designed to provide you with valuable insights and strategies to navigate the market and make informed trading decisions. Today, we look at the rising trend of investing in SME IPOs and address the problem that traders face when they invest in a company without understanding the fundamentals.
The Indian SME IPO market is booming. With a growing number of listed companies, an ever-increasing market capitalization, and soaring investment optimism in the segment, investors are flocking to SME offerings. But are they making informed decisions? Experts suspect that investors may be overlooking risks before joining the SME bandwagon.
In these small IPOs, people are coming not for a long-term growth, wealth creation. They are coming to make quick money. And when they hear on YouTube or on TV or they read in the newspaper that any particular SME IPO was listed with 100% gain, they get interested in that. They ignore actually fundamentals, they ignore the products and services of the company, and this creates the whole problem.
For investors, limited financial records and disclosures by SMEs, along with post-allotment liquidity issues, can significantly impact returns. There are other risks to consider too.
I have seen a lot of companies, those were listing with 100% gain, but within next 1 year, these companies came down by 50%, 60%, 70%, 80%. And because the liquidity and volatility is there, people were not able to exit also.
The complexities of the SME IPO market requires a nuanced approach.
SEBI understand that big size retail investors should be participating in this SME IPO, and that's why they have kept the minimum investment amount 1 lakh and more.
Research and risk assessments are essential to navigate the SME IPO market successfully. Don't let the hype cloud your judgment. Informed investments are always the safest.
Welcome back to Midcap Radar. Well, one particular stock that's doing very well in the session is Macrotech Developers. This on the back of an upgrade from Kotak Institutional Equities. Vinny joins in with more details.
Yes, so we are seeing an upgrade that's come in for Macrotech Developers, and this one is from Kotak, where they've upgraded the stock to a buy, target price of 1,340 rupees per share. What Kotak is highlighting that they believe that the company has been doing quite well. They've consistently been delivering in terms of healthy growth across the matrices and across sectors for them. Now, overall, the company has managed to see a 34% growth from FY21 to FY24, and they expect a 21% CAGR growth over the next 3 years as well. What the Kotak note is also highlighting that business development will continue to be grow and continue to be steady. Largely, mainly what is driving it is the joint development agreement. The management also said that they gradually want to enter newer cities, and if that works out well for the company, the way it worked out in Pune as well as Bangalore, then we could see a good upside coming in for the stock.
Vineet, thanks a lot for that. Macrotech Developers among the top gainers within the real estate basket too, trading near gains of around 4.5%. The other stock in focus though is Havells, and that is reacting to its third quarter numbers and of course the management commentary as well. Upasana is here with more details on that. Upasana.
Well, certainly the company has reported a weak Q3. The numbers have missed our poll estimates, but the management commentary remains quite upbeat. Now, coming to numbers first. Now, company has reported a revenue growth of nearly about 11% on the YoY basis, which is lower to what we were estimating. This is mainly dragged by company's key segment, that is the cable and wire segment, which forms nearly 33% of the company's overall sales mix. Now, cable and wire growth was muted at just about 7% on a YoY basis on the back of wire destocking, which was mainly led by copper prices softening. Now, coming to the margins of the company, they were down about 110 basis points lower than what the street was estimating at 8.7%, and PAT was down about 3% at 278 crores. Now, coming to the con call highlights, where management has highlighted the outlook for FY25 and FY26. The management is positive on growth and margins in the forthcoming quarter. It says that it is confident that the switchgear segment will come back to its normalized contribution levels, that is 38 to 40%. It believes that the lighting segment volume growth was healthy this quarter, that is about 13 to 14%, and sees the price erosion tapering off, leading to a positive outlook for the upcoming year. The management is also confident about when it comes to the ECD margins, and it believes that the margins will come back to the normalized level in Q4 and will range somewhere between 12 to 14%, which is now at around 11%. And overall, the management has highlighted that the volume growth, as highlighted earlier, in cable and wire segment was flat. It was mainly because of the degrowth seen in wire segment, while cables saw growth of nearly about 11 to 12%. On back of this, CLSA has given an outperform rating on the stock with a target price of 2,120. It says that the management has indicated improving consumer demand, helped by festive season, while industrial and infrastructure demand remains strong for the company. While the numbers were weak and likely to drive another round of estimate downgrades is what the brokerage has indicated.
Thank you so much, Upasana, for taking us through the highlights as far as Havells is concerned. Well, the other stock in focus today, and that's seeing a bit of selling pressure, is Sterling and Wilson Solar. Remember, yesterday the stock gained significantly after delivering its results during market hours. Yesterday, post-market hours, the company went ahead and updated the exchanges with an investor presentation. First, let's have a look at the numbers themselves. The revenues higher, almost 1,837 crore versus just around 583 crore. Company coming back to black. So when you're talking about margins coming in strong at 3.8%, net profit this time around of close to 15 crore versus a loss seen last time around. Some management changes too, something that the company alluded to. But what is it that the streak hasn't really liked? Number one, order inflow of close to 5,679 crore, which indicates that the order book has moderated on a sequential basis. So order book at the end of December 2024 is 10,167 crore. Net debt, something that the company has been attempting to reduce, has declined sequentially by around 150 crore. Company says that the new order inflows are lumpy, and order inflows have been impacted both by cyclicality as well as seasonality. They say that the active EPC pipeline is something that remains quite strong, as high as 27 gigawatt. Now, the most important development or trigger as far as Sterling and Wilson Renewable is concerned is the Nigeria order. And the company gave an update, Hormaz, as far as that particular order is concerned. They said that, let's first quantify the size of the order. Solar PV power plants up to 961 megawatt peak. Company says final terms have been negotiated. Procedural steps are in progress, awaiting the final signing of the contract, and this is something that the street is still awaiting. So some uncertainty, so cooling off after yesterday's sharp surge is what Sterling and Wilson is undergoing.
And I'm assuming they've not shared a timeline as for when that's possibly what is leading to that uncertainty as well, right? Almost 10% now, Sterling and Wilson giving up everything that it gained in yesterday's trading session. And time for a short break here on Midcap Radar, but just before we do that, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app where you can get instant access to breaking news, in-depth articles and financial world updates at your fingertips. You can download the app from the Apple Store or the Google Play Store right away.
Welcome back to Midcap Radar. Well, one particular stock that's gaining in session, as you can see on the bottom of your screen, is IDBI. The company has given a clarification to the exchanges. This is mainly pertaining to the fact that regarding the divestment of the bank, and the company says, or the bank says, strategic divestment is in process and entirely being handled by DIPAM itself. On the back of this particular clarification, stock up over 6% in the session. But moving on, one particular stock that did very well and one set of stocks that did very well in the session yesterday was the life insurance pack. HDFC Life came out with a very strong set of numbers. All eyes now on SBI Life, and Yash joins in with a preview of what's expected as far as SBI Life is concerned.
Well, Vivek, after HDFC Life's strong numbers, those quarterly performance numbers certainly got other life insurance companies also excited. Today, SBI Life reports its third quarter numbers. We've put together some estimates in terms of CNBC-TV18 poll. So, of course, 5 important numbers to watch out for. The first one would be new business premium. That is expected to see a growth of about 8%. To come in at about 10,532 crore rupees. The total annualized premium equivalent or total APE is expected to see a growth of 12% at about 6,860 crore rupees. Retail annualized premium equivalent expected to grow at 13% at about 6,459 crore rupees. Value of new business, that is also expected to see about a 10% growth to come in at about 1,842 crore rupees. And importantly, margins estimates suggest that there could be a compression of about 50 to 55 basis points. Margins expected to come at about 26.86% versus 27.4%. Just like other life insurance companies, SBI Life has also seen some correction as far as the stock price itself is concerned. In the last 3 months, the stock is down about 15%, but in the last 1 month, it's bounced from those lower levels up about 5% in the last 1 month.
1 out of the 3 Nifty companies reporting results today. Yash, thanks a lot for that. Keep an eye out on SBI Life. Also keep an eye out on Wipro and on Tech Mahindra as well, the 3 Nifty companies reporting results. By the way, is talking about stocks that are not doing well in the broader markets. Varun Beverages is one of them. Mangalam spoke about it on a halftime report about how the market share gains seen by Campa is weighing on the stock. A slight recovery from the low, still down around 4%. The other one that is not doing well today is Shriram Finance. That too among the top losers on the index, 4% down in today's session as well. And Bharti Hexacom seeing some bit of profit booking in today's session. Shriram Finance at the lows of the day and Bharti Hexacom too witnessing some profit booking. That too has slumped to the day's low. With that, it's a wrap on this edition of Midcap Radar. From Vivek, me and the team that put this show together, thank you so much for watching. Your stocks for the next 30 minutes.